Today we're going to talk about real estate investment trust. So this video is for anybody who's been thinking of investing in real estate, whether residential or commercial for a long time, but has not been able to do so because it requires a lot of research and funds. Then there is an alternate for real estate investment trust. And if you've heard about it, you know some details, then you can go through that specific sections of this video wherever you need those details. Otherwise, you can go through the full video. So in this video, what is it that we are going to talk about? We're going to talk about what a REIT is. Why should you invest in REITs? Which are the REIT options that you can invest in India? And what are the returns that you can expect from these REITs? How should you go about investing in these REITs? How do these REITs make money? How do they qualify to become a REIT? Is it safe to invest your money in these REITs? Is what we are going to talk about. Should you invest? We are going to, and then finally, I'll give you my opinion about should you invest or not. So I am a chartered accountant who's working as a salaried employee, but I do investment in my part time, and this is where I think I should make this video to help you all out who have limited time to understand what a REIT is and who want to explore good investment opportunities. So let's go ahead. What is a REIT? And in this video, I'll talk about in very simple layman terms, nothing complex, no difficult logics that make it difficult for you to understand and invest in a REIT. I'll try to keep it very simple from your perspective and not from a corporate perspective. So what is a REIT? It simply allows everybody to invest in real estate is what a REIT is for you. Anybody, like I mentioned, who wants to invest in real estate is having double thoughts, should go ahead and invest in a REIT. Now, how a REIT is formed. So there are some companies that own or finance income producing real estate across a range of property sectors. So what does this mean? So it means there are some companies who formed a trust and then they invest in real estate that will produce income for you. So for example, let's say I am that company. I have bought some buildings or I have made up some buildings which I will either rent or lease out, and that will generate income for me. This is how a REIT company or a REIT trust will work. Now, this real estate companies, they should meet several requirements to qualify as REITs. And we will talk about these requirements, what these should be. So in short, this is regulated. So it is not that anybody can open a REIT. There are specific strict regulations as to how do a company or a trust qualify as a REIT. And we will be talking about this in detail. So in short, until now, it allows everybody to invest in real estate. How? They form a trust, they create they invest in real estate income producing real estate, and that is how they generate income. Now how do you make income in it, right? So what you have to do is, so for you, imagine this trust as a mutual fund. So for anybody who does not know what a mutual fund is, can refer to a lot of information, or I can create a separate video. Let me know in comments if you want to understand what a mutual fund is. But for now, it is like a mutual fund, which means a company is investing into different funds or different real estate sectors on your behalf, and they are charging you a small percentage commission for investing. So let's say I am a mutual fund manager. I invest in different funds because you don't know what fund or what real estate is good. I have that knowledge. I will invest in those funds, and in turn, I will charge you a fees. So let's say I make you 10%, I will charge only 1%. So in turn, you make 9%. So that is what a mutual fund or this trust is. And these rates are traded on stock exchanges. So for you, for a layman, as you would buy a normal stock or share of a company, you can go ahead and buy the real estate investment trust like a normal share that you buy on stock exchange. And then how do you make money? The company is making money by investing in those properties, and the income that is produced from those properties is what is distributed among the stockholders. So you don't have to go think about what property, which location should I buy in. It is managed by these REITs, these trusts. In turn, they charge a small fees, right? And what you can do is you earn from these REITs. You earn the income from this. So you are financing these trusts, and in turn, they are paying you dividends or interest, which we'll be talking about further in detail. Why should you invest in REITs? Why? Because it allows everybody to invest in real estate, in short, is what I'm trying to tell you. If anybody who's been trying to invest in real estate should go ahead and explore this REIT options. Another one, you get competitive total returns based on high steady dividend income. So what this means is that you have a recurring income. So they pay out dividends, let's say quarterly. So you have high. And why I am using the word high, because this dividend income, as compared to your FDs or stocks, it gives you a regular steady dividend income. And it not only gives you dividend income, you can also gain from long-term capital appreciation. What this means is, let's say you bought a unit of REIT for 300 rupees, but now that has risen to 400 rupees. So 100 rupees you've earned as long-term capital appreciation, and let's say it has paid you 3 rupees in each quarter. So 12 rupees is what you would have earned in an entire year as dividend income. So you get regular income as well as the benefit of long-term capital appreciation, much similar to, let's say, those sovereign gold bonds. I can try to make a separate video on what sovereign gold bonds are. So if you are interested, let me know in comments and I can share and make those videos as well for you. So what are different REIT options in India? So for you to invest in, there are three main real estate investment trusts in India. First one is Brookfield India Real Estate Trust. Second is Embassy, and third is Mindspace Business Parks REIT. So you have very limited options. These are big corporate players who are into this, and you can invest or choose from any of these REITs if you want to invest in India. Now let's talk about what are the actual returns from REIT. So for example, I have taken here Brookfield India REIT, and I am showing you the income that it has generated for you for the year 2021 to 22, financial year 21 to 22. So if you see, for each of the 4 quarters, they distributed almost 6 or 5 rupees per share or per unit that you hold in the form of interest and dividend. So they have invested in properties that are earning income for them, and that income is getting distributed to you in the form of interest and dividend. So now you will think about, oh, it's only 6 rupees for a 200 or 300 rupee unit that you bought. But keep in mind, this is quarterly. And when you convert it to annual, so you've earned 22 rupees dividend per unit for an entire year, which is almost 8% yield. So this yield has been calculated, the IPO price of 275 units. So let's say this unit was launched at 275 rupees, and each year it is giving you 22 rupees as dividend. So you are earning 8% interest on this, which is much more than a FD or government or treasury bills that you will buy. Now, if you see, this is the second part, is the capital appreciation. This was launched at 275, but as of May 17, 2022, this is at 320 rupees. So almost 45 rupees, which is 24% return is what it has given you since this IPO was launched 2 or 3 years back. And if you translate this to annual return, it is giving you almost 7% return. And this is only for this last 2 or 3 years. When you go ahead, think of long term in 10 years, both this dividend income as well as capital appreciation could be way, way much higher. Similar to this, if you see for Embassy REIT, it has also given, if you see, this is a comparison for 22, 21, and 20. It has also given you a yield of almost 5.85, 6.95, 6.6%. So almost average out to 6% return is what Embassy has given you. Similar to Mindspace, if you see, Mindspace has also given you around 6.5 to 7% return, which is almost dividend of 18.4 rupees per unit. Now, which of these REITs is better? You can compare for yourself, do your own research. Otherwise, I am planning to make a separate video on this. You can let me know in comments if you want me to prepare a separate video on this one. So if you see, the all these shares are in the range of 275 to 300, and the offer price was 275, and when it was listed for 304 rupees. So there was a listing gain also. So it has given 7% dividend yield, and it has risen 27%. So capital appreciation of 27% since it has been listed. So it is a very good investment where you are earning a regular recurring dividend income, as well as the price or the capital appreciation is also increasing. So if you see, it is similar to buying a commercial property. You've bought a commercial property which has risen by 26% and it is giving you rental returns also. But the catch here is that it is not that you need to invest a hefty amount of, let's say, 70, 80 lakhs or 1 crore, 2 crore rupees. You can start investing with 500 or 1000 rupees also, and correspondingly, you will get the dividend or income on this. So how do these REITs make money? Like I've been telling, these REITs or these trusts buy properties, and most of these REITs, what they will do is they will further rent out these leasing spaces to some corporates, and they will collect rent from them. And that rent, that is the remaining part that is left over after deducting all the expenses and all for them, that is distributed to the stockholder or shareholders. And these REITs, like I was mentioning earlier, there are some qualifications that are needed to become a REIT. They must pay at least 90% of their taxable income to shareholders, and most also pay 100%. So after deducting all the necessary expenses, the profits that are left out, 90 to 100% are distributed, and that is where you get 6 to 7 or 8% yield that I have been speaking about earlier. So this is how REITs make money. They buy properties, they rent it out to corporates, which in turn give them rent, and the entire income accumulated gives you your share of dividend or interest income. How do you invest? Like I've been telling, you can just go ahead and whatever platform you use, Grow, HDFC or Zerodha, anywhere you go, just look for these REITs, Embassy, Brookfield or Mindspace, and you can simply buy them as a share that you would buy. So if you see as of the pricing, this shows what has been the 52-week high or low for each of these stocks, and you can estimate it will give you a fair idea of capital appreciation that all of these has gone through, and almost all of these are in the range of 300 to 350 rupees, depending on when you're watching this video. Now, how does a company qualify as REIT? Like I've been mentioning, there are a lot of qualifications that these trusts must qualify to become a REIT. And I have listed some most important over here. For example, they must be registered under a registration act. Their main objective should only be to carry out REIT related activities. The trustees and sponsors and managers should all be separate. The people should be fit and proper persons as per SEBI guidelines. Whether they have proper certificates or not, they cannot invest in multiple classes of REITs. The corporation must have a minimum asset base of 500 crores. So we are talking about big corporates who buy big properties and give it out, and in turn earn huge rent, which you can now be a part of. So 90% of the distribution, like I've said, the distributed to the unit holders in the form of interest or dividends. And 80% of the total investment should be in income generating assets, which means they should buy property, which in turn are giving them income in form of rents. Only 20% of other investment can be in non-construction assets for these REITs. So there are a lot of other qualifications for a REIT, but for you from an investment perspective, I have listed the high level ones. You can find more details on the internet, or I can share a link in the video description as well, or let me know in comments if you need the detailed link. Should you invest? My answer to it is yes. If you want to explore it, start with 1,000 rupees, 10,000, 1 lakh, 10 lakhs, 1 crores, whatever, you have appetite to invest in. This is really growing. REITs have just started in India. And once people get to know more about it, it is going to grow more and more, because people are going to buy more and more units of this. People are going to get more interested. So capital appreciation in long run is going to give very good returns. In case not, even if it is stagnant for some years, you can at least expect to get 7 to 8% returns after your tax is deducted and you get this money. So which is a very good amount. You get capital appreciation as well as dividend income. So this was my first video where I've been trying to appear in person. So if you like this video, let me know in comments if there's anything else from a finance perspective that you would want me to cover. Thank you so much for watching.